Welcome back, goal setters and dream builders. Today we're talking about buying a house versus renting and why buying a house still beats renting even with high interest rates. So let me ask you a question. If you paid $2,000 a month for 10 years, would you rather own the house? Or would you rather help somebody else buy a second or third vacation home? Because that is exactly what you are doing when you rent. You are helping somebody else become rich. And the landlord is somewhere sitting saying, thank you so much for your contribution for my retirement funds. So today I'm going to break down why buying a house still beats renting even with high interest rates. I promise I will keep this simple, factual, and a little enjoyable. To begin, let's begin with the biggest lie about renting. Many people really believe that renting is cheaper than owning a house. That's only true in the short term. Short term meaning 5 years and less. Let's check the reality of this. When you rent a house, you build zero equity, your rental increases every year, and the landlord really builds wealth out of your pocket. Meanwhile, when you buy a house, parts of the monthly payments builds ownership, builds equity for you. Your monthly payments becomes more predictable. Your home, your house gains value over time. So let's use an example just to illustrate this. Let's say you rent a house for $2,200 per month for 10 years. Your total payment is going to be $264,000. And at the end of the day, you own nothing but maybe memories or probably a damaged security deposit. But if that money went towards a home, a mortgage, that money could have built equity for you. Now, talking about equity, what is equity? Equity, it is part of the home, part of the house that you own. How? Because the mortgage payments that you pay every month does two things. One, it pays the interest rates. Second, it pays down the loan balance. So slowly as you pay, you own more of the house. Think of it like this. Renting is like buying a gym membership where somebody else goes to the gym, work out and gain the muscles. When you buy a house, you pay the gym membership, you go to the gym and you gain the muscle yourself. Now, let's talk about home appreciation. Scientifically, real estate really appreciates over time. In many countries around the world, including Canada and the United States, the average appreciation of the house per year is between 3 and 6% per year in a long-term investment. So let's use an example for illustration. Let's say you buy a house today for $500,000, and let's say if it grows 4% per year in 10 years, that's roughly $740,000 appreciation. The difference is $264,000 in appreciation, home appreciation in value. And here is the funny part. You didn't renovate the house. You didn't add bricks to the house. You simply lived in it. Now, maybe ask your landlord and say, can my rental build me equity? See how fast he laughs at you because he knows what is going on. Let's talk about inflation. Many people fear high interest rates when they are thinking of buying houses or buying a house. But what they forget, mortgage actually works for homeowners. How? Because your mortgage payments is going to stay relatively the same while money loses value. So today you might feel like you are paying your payments is expensive, but it won't be the same in 10 years because your income is likely going to increase and your payment is likely going to stay the same, because if you lock in your 5 years mortgage rate, your payment is going to stay the same for 5 years. Meanwhile, when you rent increase every year. And homeowners or landlords, they don't believe in inflation relief. They believe in annual rental increase. And here is something very powerful. A mortgage acts like a forced saving strategy. Because many people say, I will invest instead of buying a house. But let's be honest, most people who say that, they definitely end up investing in Uber Eats and Netflix subscriptions and other stuff. A mortgage builds discipline. Every month, you are building an asset. Think of it like this. When you rent equals to consumption. Consumption equals to zero outcome. Buying equals to investment. Investment equals to equity profit. Same payments, different outcomes. Another huge advantage of owning a house is stability and control. When you rent a house, you have no control over your living situation. So first, your landlord can increase the price. Second, he can sell the house or simply ask you to leave. Meanwhile, when you own a house, you control the situation over your living situation. You can rent a part of the property. You can renovate if you wish, or you just build long-term stability. And the peace of mind as well has a price as well. So I will share my story. In 2022, it was around September ending toward October. So I received a letter in the mailbox from my landlord. It said I was renting a 3 bedrooms, 2 washroom for $1,500. So the letter said for the next year, the increase is going to be increased 30%. So my rent was going to move from $1,500 to $2,000. At first, I thought it was a joke. Then I sent an email back and forth. I realized it was actually true. So my belief that renting was cheaper suddenly switched because I projected $2,000, and then I asked myself, should I be paying $2,000 for rent instead of paying the mortgage? So my belief, my understanding suddenly switched, and trust me, the next year, the same month, I received the email. I started looking for properties. I was thinking to buy a house because now renting was becoming more expensive. And I eventually ended up buying a house, and I definitely don't regret it. let's talk about interest rate belief. Many people say, I will wait until interest rates drops so that I can buy. But what they forget, you can actually buy and refinance interest rates in 1 year, after 1 year or 2 years. What you cannot refinance is the price of the house. So once the price goes up, you cannot go back and refinance that. So smart buyers understand this. You date the interest rate and marry the property. Let me give you an example to illustrate this. So if the price of the property today is $400,000 and you wait 1 month, 2 months, the price of the property might increase to $600,000. So the more the price of the property, the more you're going to pay in the future. But when you buy now, today, on the current interest rates, you might save a lot more than waiting for the future. Because remember, you can refinance the interest rates in 2 years or 1 year. Don't get me wrong, because renting is not always wrong. In some cases, sometimes renting is the best option in the short term, 5 years and less. But if your goal is to build wealth and stability, control, and build future wealth, buying is the best. Buying a house is the best move you can ever make. At the end of the day, imagine 25 years renting. You have just helped somebody become rich, and you have nothing. 25 years of owning a house, you might be mortgage free. And trust me, sleeping in the house that is fully paid off, that sleep hits differently.